Everybody, Uneducated Economist here. So in today's video, we're going to be talking about the Federal Reserve and where they are planning on going or when they are going to be cutting interest rates, just because it seems to be like on everybody's mind. It's like articles are everywhere. All these economists all over the place are predicting when the Federal Reserve is going to be cutting rates. And it was funny because towards the end of last year of 2023, it was not a matter of if the Federal Reserve was going to be cutting rates, but when and by how much. It was huge. People thought that there was going to be 7 interest rate cuts. Now it's projected that there's going to be 1 or 2 or 3 or possibly none. I don't know what the actual outcome is going to be from the interest rate cuts, but I know that the credible threat from it is going to be very significant, as that is probably going to be more impactful to the economy than the actual cuts themselves. Now, something that I found very interesting going through all my research, and a lot of you who have been following me on this channel know that I have been basically addicted to this particular speech, Monetary Policy for a Low Neutral Interest Rate World, in which that John Williams pretty much called it out a long time ago what it is that the Federal Reserve was needing to do with their monetary policy in order to continue to operate and actually stay in existence. I mean, they had some major issues taking place. And now one of those things was an inflation expectation that was persistently too low rather than too high. And he describes that in that speech. Now, part of the monetary policy is now credible threats. Literally, their words, like whether or not they plan on doing something into the future, will then start getting the markets, the people, to go out there and behave in a way as if the Federal Reserve has already conducted that business. But they really are just sitting on their hands doing nothing at all. Part of this operation is the communication. The Federal Reserve at one time, if you go back to the 90s, they were very quiet. They hardly spoke anything of their monetary policy. Forward guidance was not even a term. When they did speak, it was so confusing. In fact, Greenspan, I can't remember the exact quote, but it was something like, if you understood me, or if I made myself particularly clear, you probably misunderstood me, is because he was so confusing on everything he said. And he did that on purpose because he didn't want the people or the markets or anybody else to know exactly what it was that the Federal Reserve was going to do, because that monetary policy was a secret. It was literally the adjustment of interest rates that would get the markets to behave in the direction in which that they needed them to move, because the lowering of interest rates or the raising of interest rates would be the actual impactful part of the economy, where nowadays that lowering and adjusting of interest rates or raising of interest rates is not the same tool that they once had. And so now their communication and what it is that they say is really more impactful to the economy than the actual adjustment of interest rates. And that's really because of the low neutral interest rate. This gets really confusing. I'm trying not to get that far into it, because really what I want to focus in on is the communication coming from the Federal Reserve itself. Now, a lot of people just focus in on Powell, right? Like Jerome Powell. Jerome Powell is just one voting member of the FOMC, the Federal Open Market Committee. The Federal Open Market Committee are the people who vote on monetary policy. Monetary policy is what's happening within the financial markets, the financial banking system, the interest rate setting policies, all that stuff. Fiscal policy is the government spending, going into debt, issuing out treasuries, all that, right? Two very different things that are happening. So the FOMC has voting members. And the voting members also, there's also alternatives, or alternates, what they refer to them as. I think there's a total of 18 people on the FOMC, 12 of them being voting members. Now, if you go and just Google just about any one of these people, you're going to find where they have communicated within the mainstream media. This is something that you would never, ever, 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 ever would have found back in the 90s. Right, was these FOMC members communicating with the mainstream media. Now, I left down in the description of this video a bunch of articles, 6 of them, I don't know, maybe more. If you just go and Google any one of these people, and you're going to find that just about every one of them has something to say that is going to be not necessarily clearly defined, but given them the idea of where it is that they feel that the economy or that the interest rate should be going according to the economy today. Now, out of all of them, Goolsbee is the only one that I found that is still kind of stuck to his ideas that there's going to be 3 cuts coming to this year. All the rest of them had very like hawkish views. Not all of them, but most of them did. Like, let me see. I wrote a bunch of them down here. Harker, right? We are not where we want to be. And this was the quote that came from him, saying like, holding back on the interest rates, thinking that inflation was still running too high. Logan, much too soon to cut. Bostic, talking about inflation, much slower, talking about the progress on inflation, was much slower than we have expected, meaning that they were probably going to have to keep interest rates elevated because the inflation expectation is still too elevated. Or not expectation, the inflation itself is still too elevated. The inflation expectation is well anchored. Right? He didn't say that, I'm saying that, but they've said that too. Barkin, given the strong labor market, we have time for the clouds to clear before beginning the process of toggling rates, I think is what he referred to it as. And so I think about that right there. The labor market itself, like that is probably one of the key indicators of where it is that the Federal Reserve is going to be moving with their interest rates. Because as much as people want to tell me that it's all about an election year and stuff like that, it's not. Right? There's nothing within anything that I have ever studied within the Federal Reserve statements and documents and anything else that it's taken into an account in an election year. Nothing. Like not a zero, nothing. And so I don't believe in the whole election theory kind of thing. And so when it comes to the Federal Reserve and the adjustment of interest rates, it comes to the labor market and price stability. And if they have a labor market that, how do they term it? Full employment or maximum employment. Basically, if you have everybody who has like low unemployment, I guess is probably the best way to look at it. If unemployment is really low, then the Federal Reserve is feeling like that is like a successful part of their mandate. Really, it's maximum employment and full employment, because just because unemployment is low doesn't necessarily mean that that's great for the economy, even though that's what ended up being like kind of like the focus of a lot of people out there. Now we see that the jobs market or the labor market is really like starting to go from like when people would focus in on how many people were unemployed, now they're focusing in on how many jobs are being created, because the more jobs that are created, the less willing that the Fed is going to be, or the FOMC is going to be willing to vote to lower interest rates, considering that the labor market is still doing quite well. And so that's what Barkin is actually talking about. Dudley, I think that the market is right. I think the market is right, and that the Fed is not going to go as far as the Fed had projected. So he was talking actually back towards the end of last year of 2023, when everybody had like this idea about it. Well, then shortly after that, people started really backing away from the idea that the Federal Reserve was going to have like all these interest rate cuts, right? And that's what he was referring to. He was just like, yeah, I think they're right now to think that, right? That's what he was ultimately saying. It was just like they weren't thinking the right thing before. They're thinking the right thing now, that they're not going to be as willing to cut as the Fed had projected back then, right? Kashkari, right? If we continue to see inflation moving sideways, then that would make me question whether we need to do those rate cuts at all. Now, Kashkari has, as far as like all my research and studies and watching the Fed and everything, he's been a fairly dovish dude, right? Like this guy has always been like kind of the guy who was very cautious about things and wanted to, keep things fairly accommodating. And right now he's questioning whether to cut it at all, right? Again, this is the FOMC here. Christopher Waller, we just did a great speech covered his speech just recently, talking about there's no rush to cut rates, and that even if they were to hold back on the cutting of rates, it would have less impact on the economy than cutting rates too soon. So by cutting late, it doesn't really matter to him, but cutting too soon does. And now I know this sounds funny, but like literally the cutting of rates doesn't have any kind of real impact on the economy for anywhere from like 6 months to a year, but really it's more like 18 months before it has the full impact on it. Now, the idea of cutting rates does. Like that has like an immediate impact on the markets, and people start behaving in a particular fashion as if the Fed had already done it if the communication is strong enough, right? And so if the people believe that the Federal Reserve is going to be cutting rates, they'll start acting as if they had already done it. But that may not necessarily be the case. And so now, as the dovish Fed participant here, Kashkari, who's like going into, whether or not to cut at all, it does start questioning whether or not the Fed does need to cut, considering considering what has happened over the last, 3 or 4 months when everybody thought that the Fed was going to cut. Does that make sense? So like just the communications of what happened before was enough, and they don't need to now cut because of that. And if people have this belief that the Federal Reserve is stuck in a spot in which that inflation is too elevated, then they won't need to cut. And this is really where it's coming down to, that the Federal Reserve can use that jawboning itself to now, move the markets, and you can see it taking place here. And Michelle Bowman not ready to cut. So anyway, just wanted to bring those ones up. These are all members of the FOMC. These are all people who are talking about now being very cautious about interest rate cuts when everybody had this belief before that it was going to be, not a matter of if they were going to cut, but definitely going to cut. This really all comes down to the communications of the Federal Reserve and how well they can communicate with the mainstream media. You can see right here, each one of these articles, these were all within probably in the last week or two, right? This is the monetary policy, right? This is why I am so adamant about bringing this information out like the way I am. It's not a matter of whether or not they cut the rates. It's not a matter of any of that stuff. It's literally the beliefs that has taken place that the Federal Reserve is going to be doing something. That is the monetary policy. That's why they are communicating as much as they are, is because they have to do it this way. This is the gold machine, right? Like if you remember like the speech coming from Ben Bernanke, where he was talking about how it was that they can conduct themselves considering that their monetary policy was going to become ineffective, the adjustment of interest rates was going to no longer work for them, that they have to use some other form, some alternative methods. I forget exactly what the terms that he had used. This is it. This is exactly how they are doing it. And it's working. It's totally working. And like, it's difficult because it's more of a mind game than anything else out there. And you don't really think about it like that because you would always want like money and numbers and everything to be like, 1 and 1, equals 2. But that's not the way this is going to operate. This is going to go off of perception and how it is that people are believing and reacting to the communications that are coming from the Federal Reserve and what it is that they plan on doing. And back to that gold machine, I guess I should explain that to the people. Ben Bernanke had talked about the way to communicate is that if you had an individual who had invented a gold machine where he could produce as much gold at will with very little cost or energy, the moment that information gets out to the public, the price of gold out there on the market would plummet almost immediately, even before the guy produces a single ounce of gold or has the machine to do it. Just the credible threat alone that he could produce this thing would be enough to start moving the markets. Now, this is the exact tool. This is the description of what it is that they are doing today. All right, 13 minutes into it. I think that's plenty of information. I hope I communicated that well. I kind of stumbled through a little bit of that, but we got 193 people watching with 44 likes. Please go hit that like button. Algorithm loves to see that. Cuts will cause higher inflation. I don't think that they're going to do that. I don't know if it would. I really don't know if it would cause higher inflation. And the reason why I was thinking about this earlier, how there was a toilet paper shortage, right? And everybody was freaking out about the toilet paper shortage. If there was no toilet paper shortage that was happening, right, then would the price of anything like on the paper products gone up? This is really where it comes down to, because there was a shortage of just about everything out there because they severed the supply chain. But if you threw a bunch of money, like if you doubled the money supply, would the price of paper products go up? Like, why would the price of paper products go up? There wouldn't be any added consumption. I mean, pretty much, you're going to use like the same amount of toilet paper you've always used, right? That's probably not going to change whether or not you got a stimulus check or not. However, the price of toilet paper will go up if all of a sudden there's none to be had. Now, I know, like, okay, let's take it back a little bit. Back in 1973, there was a toilet paper shortage, right? There were shortages of all kinds of things because of oil embargoes or whatever, right? But there was a toilet paper shortage, but it was completely fraudulent. There wasn't a real shortage, right? What had happened is that a communication coming from I think it was a congressman or senator or something out of Wisconsin, I think it was, who was trying to get rally up his district with this idea that there was going to be this pulp shortage, because their particular district had a big pulp industry to it. So he kind of put out this rumor that there was going to be this pulp shortage, and like, what is it that people are going to use for toilet paper? Well, this was kind of a funny thing for Carson, right? For Johnny Carson, who thought that this was a funny joke, right? So he made joke about it on his show, right? Well, of course, his show is nationwide, and people were like, whoa, there's a toilet paper shortage, because of all this crazy. So they ran out to the stores and started buying up all this toilet paper, right? And so all of a sudden, the shelves were cleared of toilet paper, and there was none to be had. And of course, if you ain't got toilet paper, you're going to start paying any price to get it. And so now this literally like fear, right? This fear-based panic buying that cleared out the shelves of toilet paper had this perceived idea that there was a literal toilet paper shortage happening, but there wasn't. It was sitting in people's living rooms. It was sitting in people's bedrooms and closets and in behind the couch and stuff. They had stocked up on all this toilet paper, believing that there was going to be a shortage out there, and it literally created a shortage for like a year, right? Rolls of toilet paper were selling for like $10 and stuff. It was just absolutely nuts. But it was completely fraudulent. It wasn't real. It was just panic buying. It wasn't fraudulent. It was just people like just freaking out. But there was always plenty there, right? It was just being consumed by everybody who just had this belief that it was happening. All right. So now, if we take that same kind of scenario, right, back to what happened during the pandemic, if people weren't freaking out about there being a shortage, right, because there was a shortage this time, and if people didn't flip out about that and go out there and start buying up all the toilet paper and all the other products out there, then we wouldn't have had a depletion of all the inventory as quickly as we did. So this is also a kind of a different way of looking at it. But ultimately, if all the inventory and distribution network was there and this flash of money came in, the stimulus, it would have been very quick. There would have been an increase in purchasing of items that people don't typically buy. But it wouldn't have been an increase in the purchases of things like toilet paper and paper towels. Like, some people might have increased their paper towel purchases, but most people probably wouldn't have increased any other paper product purchases, right? So now the shortages that would have happened inside of paper towels wouldn't have existed if it was just a stimulus check that came in, because no added consumption would have been taking place due to the stimulus. You see where I'm getting at? This is why it was so critical for the inflation scenario to take place, that there was a severing of the supply chain. Like, if that didn't happen, then you wouldn't have seen the inflation scenario as bad as it was. I know it I know it because I could see it in lumber, right? And I know a lot of people are like, dude, you can't look at lumber as everything. I called it out. I called it out from the very beginning. In fact, I called out the toilet paper thing a long time ago, all right? I mean, I did a video talking about that in, like, I don't know, 4 or 5 years ago or something. These events that are happening, right? I don't want to say, because I'm not a conspiracy theorist, I don't want to say it like that, but they were used to totally save the Federal Reserve's monetary policy. I mean, the severing of the supply chain, the whole inflation expectation being elevated, the way that the Federal Reserve was able to get a lot of their Fed funds rates back as far as get those elevated up to 5%. These were all absolutely critical things for the Federal Reserve. If they did not experience those things, they would be failing. Like, this is like, it's sad to think like all the devastation that had occurred from it, but that's what they needed to literally save themselves. If people want to think of them as an evil organization, that's it, man. But how bad would it have been had they not done it? Who knows? Like, I mean, I personally, I'm ready to deal with the failure of the Federal Reserve. I mean, I don't know if I'm necessarily ready to deal with it, but I've mentally thought about like what it would be like if they were to completely fail. I don't think a lot of people have. And so, whether it was a good or bad thing, I don't know. Man, I am just babbling today. I guess I had too much coffee. Okay, let's go cruising down here to the bottom, see what's going on. Do you believe the debt market is very near imploding? Um, I think it's always on the verge of imploding. Like, I don't think there's any real knowing exactly how much liquidity is needed out there in order to maintain the financial markets to keep them from freezing up. Like, to me, to think about it, it's kind of like almost like a teeter-totter, right? On one side, you got enough liquidity in order to balance out the amount of debts that are out there and when they're due. Excuse me. So you got this all these debts and when they're due on one side and the liquidity on the other. And when that starts to outweigh the liquidity and it starts to tip to the one side, then you start having having the bigger issues as like the availability to get loans becomes very difficult. Trying to pay off your debts gets difficult because the liquidity is drying up. If it moves the other way and that there's too much, then what you end up having is like little return on your capital investments because the interest rates are too low. You have like a slowdown in the economy you know, from the lack of like return on capital investments because it actually creates a deflationary scenario as your return on your investments no longer have the purchasing power going into the future. I don't know, like basically like if you were to invest in a low interest rate environment, by the time you get a return on your capital, the purchasing power of it was not enough to pay for the things that you could have purchased if you had just bought those at the time instead of investing it. I got a $2 super chat. Let's go take a look at that. All right. Infamous NYC. Thank you so much for the $2. All right. Now NYC went California with $20 for gig workers. Yeah. I don't know. Like, to me, when I think about like side hustles and gig economy and stuff, like I've always had to do side hustles. Like, I don't think there was ever a time in which that I wasn't doing some sort of side hustle, doing something, whether it was like back in the day when I was a kid, we used to do like firewood. Firewood was an easy one. A lot of people still had wood burning stoves and, cutting trees wasn't a big deal. So that was like one of the side hustles that we did as a kid. But, even like, working with friends with their business, like, mowing lawns or doing construction work or doing side jobs or calling bingo, doing YouTube, whatever, man. I mean, it was just like, to me, it was always about like trying to figure out where it is that you can get the extra money. We used to joke around about it. It was like going to get extra money, like you're getting money beyond the money you already have. Like, does that make any sense? It's just like it's your money. It's just not extra. There's no extra money. uh, uh, Deja vu. Investigate the background of the FOMC board members. It's kind of they're boring. It's a boring task to do it because there's really nothing exciting to find from any. Like you go back and you want to find like it's like I think the people like the Treasury, like Steve Mnuchin and Timothy Geithner, um, Janet Yellen. These particular individuals, John Williams, like they stand out. They stand out, way more than like say Barkin or Dudley or something. Like, I mean, I guess Dudley kind of comes out every once in a while. I mean, you hear stuff coming out of them, But like there's some of them who are very pronounced. I don't know how else to like, kind of put that, but they're definitely at the forefront of like these theories, these thoughts, these ideas, these actions, the behaviors, the positions that they take. I mean, you think about it, old Janet Yellen, I mean, she's been like, in all kinds of positions around. Like she ain't like a lot of people give her a bad time, call her, dumb or whatever. And I'm like, man, I don't know. You you have to think. Here's something that I found very interesting. It's a statement that I heard a long time ago, and I thought it was really good. It's it goes like this: the hardest part about being the smartest person in the room is convincing everybody you're not. Right, and that's what I think about when people kind of give Janet Yellen a hard time or anybody else out there when they talk about how dumb they are. I have to like look back and it was just like, man, they're convincing everybody, aren't they? I mean, here they are in a position elevated that's far up, and everybody thinks that they're not intelligent. And I'm thinking, well, that's the hardest part about being the smartest person in the room is convincing everybody you're an idiot, right? And I'm not saying that Biden's smart or Yellen's smart or anybody else out there. All I'm saying is just like I look back at the room and I'm thinking, well, the entire room thinks that they're an idiot. Like I didn't say it. I don't think they're smart or dumb or anything. I just kind of look at their actions to see what they do. But I think about like what other people think of them. I'm convinced Simon is the most financially educated, what is it, bum in the world? Is that what it says? Well, you know what, Jay, you're probably right, man, JC. Because like I didn't do this to try and like people were like, man, what are we supposed to do? What am I? And I'm like, I don't know, man. I'm gonna go start a business, go figure it out. Like I don't know, right? What I tried to figure out is what's going on with the economy because I'm an observer of the economy. Like I'm an observer of everything that goes on. I've always been kind of like the person who was a proof of concept kind of person. Like I didn't necessarily want to do something, but I wanted to know really how it worked. And so I would kind of go and mess around with something just to see. I was like, okay, I kind of get it now. All right. And then that would be it. That was kind of what I was doing with the economy. And I just never lost it for it. I just kept diving in. It was just like I just wanted to know how it worked. And every time I would sit there and learn something different or learned a different theory or, came up with a different idea, my beliefs kept changing. It was just like, wow, I used to be really convinced of like, hard money assets, gold standard kind of thinking. And then the more I moved, through what happened through history and how money changed and how it evolved, and I started realizing what was it that was taking place that took gold out of the currency and then moved the United States and the Federal Reserve note into the position of a world reserve currency and how dangerous of a thing this really is. And knowing like, oh crap, like our standard of living, like all this nice stuff that we have and all that would not exist if it wasn't for the fiat currency system the way it is. Like it would be very different from what it is. I'm not saying that it would be a good or bad thing. I'm just saying it wouldn't be like this. And I like my house and I like my cars and I like my neighborhood and I like my job and I like my life. And so to me, it was just like there's nothing bad happening here. It's just the position in which that we are all seem to have taken. Now, whether or not that is going to continue to be the case is really how it is that you continue to position yourself moving forward through the issues that we are going to experience because nothing stays the same. Right? Like we used to be able to go and get a factory job and buy a house and raise a family and do that all off of the one factory job. It doesn't exist anymore. There's no reason to believe that it's ever going to go back to that. Right. And it's not a matter of going back to that. The factory job plus a YouTube channel plus calling bingo plus doing side hustles plus all the other stuff if you want to be in a house because it's going to take all that effort to do it. Right. I mean, it's like, my wife was reading to me earlier today some of the statistics on what it is that you're going to need in order to own a house. And I'm thinking, oh my God, like I'm looking at it, I'm listening to her and I'm like, we can barely do this with what we have going on. right? And I think like what we have going on is pretty significant considering like I look around at some of the other people who I would consider like my peers in life couldn't do it. Like, I mean, it was just like it's mind blowing to me. It's like it's almost like a magical experience, and I think God, I'm thankful for it, that I got it. So anyhow, exactly, Simon, you get it. Thank you, Jesus. All right, 1935 gold changed. Anything prior to considered antique gold very rare. Yeah, I have an old coin from the 20s, actually. I have, I inherited it. Well, I didn't really inherit it. I became the keeper of it. So it's not really mine. I can't sell it or anything like that, but it's a really old coin. It's for the, it's the family owned. All they're doing is making sure the dollar is destroyed at zero value. I mean, you'll own nothing and be happy. Wow. It's not, I mean, think about it like this. You'll own nothing anyway, because that's the way most of history has been. Because we had just recently come off of the greatest standard of living due to an industrial revolution that the United States really got to enjoy as we produced mass amounts of products and distributed them around the world as the world were sending us their money. Yeah, we had a really great opportunity there for the lives of a lot of Americans, the American dream, right? But that doesn't exist. It's like the land of imagination, the make believe, right? That's not the way history in any kind of time has ever proven to be the case. Like, go and look at, like, I'm not biblical, like, I don't know, but I'm pretty sure you could probably find stories in there of mass inequality where only the richest people lived in houses and everybody else had to live in, like, communities, tight knit community, whatever, in order to have any kind of survival, because only a handful of people were ever going to be able to actually live in a house. Right? This isn't new to the world, right? It's sad. I mean, I want everybody to have a house. I mean, I'm in the construction supply industry. Bring it on, man. Let's build some homes. Like, I would love to distribute a lot of lumber. But right now, they're shutting down lumber mills. I mean, I just read about another one here in Oregon that's shutting down. Another 93 employees getting laid off. And a lot of this has to do with the political environment in the way that they are handling the forest industry around here. But still, like, I think about like where it is that prices are, they're still incredibly low considering where we were prior to the pandemic. They're right in line. There's no difference right now. How long have we been into this? 32 minutes. Okay. What were we talking about? I forgot, I even forgot the topic here. Still not going to cut rates. I already forgot the title. All right. Like Tyler Durden said, the things we own us. Distractions from what's really important. What would you rather have? Weekend picnics with the neighbors or 70s TV? Or 70-inch TV. There we go. This is really what it comes down to, because I don't think that really makes any difference. Right? See, here's the thing. Everything in life, every single action from the time that you wake up till the time that you go to bed, you have one of two things that you are doing. You are either pursuing pleasure or you're pursuing excellence. Right? That's it. And if you're just lazing around doing absolutely nothing, that is your pleasure. Right? That is you chasing pleasure. And the more you chase pleasure, the more harsh experiences you're going to get from that. The less pleasurable things you will have, because you are taking the pleasure from the universe. Right? You're just taking it for yourself instead of earning it. And it's real easy to understand like what it is that's chasing excellence and what it is that's chasing pleasure, because any single minute of the day what you are doing, right? You may not like it, you may not like the idea of it, that it's hard, that it's going to be gross, that it's like not going to be comfortable or whatever it is that's going to come from it, but what the right thing really is at every given moment. like, you know what to do that is right and what is wrong. You know that if you're going to get high, that's wrong. You know that's chasing some sort of pleasure. It's not chasing excellence. Going to work is chasing excellence. Cleaning up is being excellent, right? Taking care of, maintenance of things, that's chasing excellence. Cleaning up and organizing, this is excellence. Everything is like all about excellence. If you're chasing excellence constantly, pleasurable experiences just come from that in the most profound ways too, like out of nowhere. That's the whole point of it, is that if you're in a constant pursuit of excellence, great things will constantly happen to you. People don't believe that it will, so they move into pleasurable experiences, out of the sake of like, man, I deserve this kind of thing. And they try to take it. And then what they end up experiencing is a harsh reality that isn't what they really wanted. I don't know how I went off on that. Sorry, guys. Let's talk about something else. The picnic gives pleasure while receiving. The TV only takes. Well, okay. So the TV doesn't, because at times my family and I, we all kind of do different things, but at the end of the night, at the end of the day, we put on a movie, we pick a movie out, and we sit around and we watch the movie at the end of the night, right? Most of the time, I can't make it but 15 minutes into it, and I'm out, right? I'm sleeping. But this is like our get together at the very end of the day, right? To watch TV, right? Now, whether or not it's a little tiny TV, like, on a computer screen, or a giant one on the wall, it's still the same thing, right? It doesn't matter. So it's how that thing is used. It's the meaning that you're giving it. Now, if you're sitting in front of the thing 24/7 and it's always on, and there's like, and that's all you're doing, then yeah, that's a problem. And going and hanging out with the neighbors isn't a problem either, right? That's just as, it's just as fun as anything else is. But if that's like the pursuit of what you're doing, is to go and hanging out with people, regardless if it's just going with the neighbors on a picnic, or going and hanging out at the bar, or going and hanging out at the beach, or going and hanging out and going skiing. I mean, those things should come. I'm not saying you deny yourself those things. It's just the pursuit of that on a regular basis is something that is going to end up causing a harsh reality. And usually it ends up costing you financially. It's going to cost you, maybe with breakups with people or something like that you have to go through. There's, whatever that's going to end up happening from chasing these particular pleasurable experiences on a regular basis. What I'm saying, it was just like, I've seen people out there who given up on the excellence in their life in order to chase some kind of pleasurable experiences that didn't really do anything for them. At the end of it is just like they ended up losing everything that they had. All right, moving on. What about being high while working? All right, that's what I'm planning. That's when I'm planning my move. House on the market and going to South Florida in an RV truck. Life is about balance. Go in either direction too much and things get shaky. Yeah, I can agree with that. Got the F-250, new engine and transmission, and a nice camper on it. I just need parking space. Inflation is high because the can was kicked for a decade and now the piper needs paid. Would the consequences of deflation be better? I think not. I think, well, in 2008 proves they won't let it happen. Yeah. Well, I mean, this is the problem with the whole idea, is that the deflationary scenario that the Federal Reserve knew was going to come, it is a problem for people who want a job. All right. It is a problem for people who want to borrow money. It's going to be a problem for people who want to run business, right? It's going to be a problem for a lot of those type of people. Now, it's not going to be a problem for a saver. It's not going to be a problem for people who have positioned themselves adequately to deal with the fact that there's going to be a slowdown in transactions, a slowdown in business economic activity, that there's going to be layoffs, that there would be, hard times to deal with, less services provided, all kinds of stuff. Now, there are people who are ready to deal with that. Now, in that case, I agree with you. Is it a bad thing? No, I think not. I think it's a great thing, right? And I think it's a great thing because if you position yourself to deal with that, then you can take advantage of the situation because that's what a good economist would do, right? I mean, it's just like you just put yourself in where you need to be. But as far as the majority of the people, I do not think that they can handle a deflationary scenario. I don't think that they know how to deal with increased massive amounts of layoffs and unemployment and lack of business and, lack of transactions and things happening out there. I don't think that they know how to deal with that. So, I mean, you really have to think the good and bad consequences of both these things, and if if everybody in the world could think in that in that rationality of like, I need to be able to handle a dramatic slowdown in operations of everything, go into deflationary nightmares. Because you think about it, if there is a deflationary thing happening where prices are actually coming down, then retail sales pretty much plummet to nothing because nobody would spend except for what they absolutely had to. Because if they held out for yet and just another couple of months, and they can get it cheaper. And that is a problem. That is a spiraling debt problem. And it starts, getting worse. And if you want to go and read about like the Federal Reserve's belief on this, go back to Ben Bernanke's speech from 2002, where he talked about deflation and how to prevent it from ever taking place. That was the whole idea of having a slight inflation rate. That's where the 2% came in. Like the whole idea, people are like, why did they just come up with this magical number? It's not a magical number. I'm imagining myself from everything that I have read that the Federal Reserve would love to have an inflation rate of absolutely zero. Like no inflation whatsoever, just a complete, stable, steady, constant, never changing, never fluctuating, just being perfectly at zero the entire time. And then people could find their own market pricing for whatever products that were out there. I think that's what the Fed would want. It doesn't work like that, right? Prices move up and down. The fluctuations happen. There's never been a stable consistency to anything ever, except for like during the gold standard. And then you had business cycles, right? So although the prices stayed, consistent, the business cycles fluctuated dramatically. And that was what they were trying to eliminate. So there is no good system to it. There's no good or bad or anything. Right? It's just the way it is. Anyway, moving on. I got another super chat. Let's go take a look at that. This is from Gotham's Finest. Thank you for the $10. Thanks for the retort. Thank you, guys. I really appreciate you all hanging out. We got 241 people watching right now with 105 likes, $12 in super chats. You guys are awesome. All right. National debt, 34 trillion. Yeah. Nice campground in, what is there? Perdido? Key, Florida. All right, Bitcoin is a Trojan horse. Don't be thinking that's the answer here. I don't know where anybody would think that Bitcoin is the answer. Like, I don't think Bitcoin or gold or fiat or anything. I don't think there's an answer. Like, where is there an answer? Like, what would the answer like be? Like, if you were to have the question, like, if there was an answer, what's the question? Right? What's the question? What's the best currency out there? That's not a question. It's just a matter of what is, right? It's how you handle that, right? And that's not there is no good or bad currency. I don't care if it's seashells or gold or Bitcoin or dollars or whatever. It's all a matter of doing transactions. It's all about how it is that I trade my products, my services, my, talents, my, possessions or whatever it is into something else. Into somebody else's, services or talents or possessions. How do you do that? Like, how do you facilitate that trade? Hopefully I could find something of equal trade. I got my computer here. Maybe I could trade that for, something, and if they can find the same value to it. But how do you conduct yourself in that? Whether it's Bitcoin or gold or silver or, dollars or anything else, literally, that's what it's all about, is just making that trade happen. What I think a lot of people get concerned about is whether or not they can retain their purchasing power, right? If I work today for a certain amount of dollars, I want to know that I can hold on to these dollars at least for a while and be able to purchase the same amount of goods and services as I did when I earned it. Like that, where I think that right there is probably where most people end up losing it. Like there's like, this is why it doesn't work. This is why it fails. This is why you know, it shouldn't be like this. But what else is it going to be like? I mean, it can be like gold and silver. You can immediately take your money and immediately switch it over to gold and silver and have it in gold and silver and Bitcoin. And then you'd be in possession of that, right? I mean, is that a better, stable place to be? I mean, you can't go and trade necessarily with anybody else because they don't necessarily want that stuff. I mean, it's got to be like something that is accepted by other people out there. And now you can convince them, hey, it's silver. It's the real deal. Look, right here, man. You know, I mean, whatever story you want to tell them in sales pitch, and you can convince them of it, or you can deal with the whatever it is that they want, right? Which seems to be paper currency because everybody is accepting of it. Now, it's not my job to like convince somebody that silver is good or Bitcoin is good or that dollars are bad or whatever it is. It's not a matter of that. You step back, you look, it's just like everybody's using dollars. That's weird. Okay, how do I deal with that? You know, how do I deal with the fact that everybody uses dollars and it's this horrible thing, all right? Because I know, right? I see the deterioration. I know how bad it is. What difference does it make? It doesn't, right? It doesn't, like, my opinion of it means nothing to the world. All right. Like I can think of it all I want. I can think how bad it is. I can try to convince people how bad it is or how good it is or whatever. It means nothing, right? The only thing that matters is how it is that I conduct myself, considering that everybody else is still accepting it. Right? There is no fixing it. The problem that exists is the one that's within that you and the way that you're conducting yourself within the economy. That's where the problem exists. Hi, economist. Any thoughts on the price of new and used video games during economic downturns? Wow. Root pie. I would imagine that if you had economic downturns, then most people are probably going to be giving up pleasurable things, and that's including video games, because economic downturns makes you move more towards the necessities, and video games are not that. So that's my honest answer towards that one. Now, if you got a rare video game that's in a, you know, whatever, that's somehow has a higher value to it for whatever reason like that, you're talking something different. But I mean, that's like a very unique kind of market, and I just can't imagine that being like a good place to be. All right, gold adjusted for M2 has a negative 14% return over investment over the last 52 years, and not the answer either. I don't know. I've never, like, maybe at one time in my original purchasing of gold and silver, mainly silver, but my original thoughts were is that I was going to protect myself from inflation. It never happened. Not once ever in the history of the very first ounce of silver that I have ever purchased has it ever protected me from inflation. Like, I do not consider it that at all, right? And so when people were like, you can protect, it's a hedge against inflation, and it was like, okay, whatever, you know. I mean, it was just like, I don't look at it like that. Like, I don't think of it as a hedge against inflation. I look at it as I've always have for the years that I have done this videos, is that I look at it more as an insurance policy. It's something outside of that third party claim, and that's something that is very unique. You don't have to worry about anybody, any banker, any envelope coming in the mail. You don't have to worry about an app. You don't have to worry about phone calls. You don't have to worry about any of that stuff when you have silver in possession. In fact, I have it here. I got one on me right now. I almost always carry. Let me see. Do I have it on me? Yeah, I do. Yeah. I don't even remember. I know somebody sent this one to me, and I'm going to feel bad because I can't remember who it was right offhand, but it's really a cool piece. Look at that. It's got like this skull and all kinds of... Isn't that cool? And then the back of it is really, you know, what's going on. Ooh, trivia. So, anyway. I love this stuff, right? It's an insurance policy, and that's the way I look at it. And it gives my expectations pretty low. Right? No expectations on it. In fact, I didn't really have any expectations on anything out there. You know, like stock market, Bitcoin, silver, gold, real estate, none of that stuff. Like almost no expectations. And I think that like actually gives me a much better view of the economy than a lot of people who do have expectations of it, you know? And I mean, I guess I do have some. Like, I mean, you know, you can't help but to if you're going to buy a house, you know, and pay all this money towards it. You do have some sort of expectations going towards it, but I keep them pretty low. Like, you know, pretty low. All right, moving on. I see old Nighter Hider up in here. Jerry, IUE, how will the monetary policy of job owning affect commercial real estate and the regional banks? I don't know if like I I don't know if that really is like how do you compare these two? You know, I mean, is it like the job owning there to protect the commercial real estate? The Federal Reserve has acknowledged that the commercial real estate market is not doing well. And how like the job owning part of it is going to interact. I'm not exactly sure how that part of the monetary policy is actually going to work, like focusing in on the commercial real estate. What I do find is that there could possibly be some sort of special purpose vehicle, like, you know, through the Federal Reserve's 13.3 whatever clause or whatever they have in their charter that gives them the unusual and exigent circumstances in order to set up a facility to backstop a particular part of the economy. Whether or not they set up a facility or have the ability to buy like the toxic assets, whatever loans that are coming from this commercial real estate, I don't know if there's an entity being built or to handle something of that nature. But we don't know because they don't tell us this information. They don't tell us the tools that they have for unusual and exigent circumstances. See, that I guess that's probably what it comes down to. And that's really what's going to end up evolving from that is that it's going to turn into an unusual and exigent circumstance if it starts getting this contagion effect. It starts causing the financial system to freeze up. If that would be the case, then I would imagine that one of these type of vehicles would step in and say, okay, hey, we're going to like $800 billion or whatever number, you know, they come up with, and we're going to start buying these, you know, toxic commercial backed securities, commercial real estate backed securities, and hold on to those and whatever, you know, insurance policies kick in and, you know, try to deal with that as far as the bailouts go and stuff. Who knows? Like, I can't imagine what that would be like. But as far as the job owning part of it itself, I don't know if that's really part of the commercial real estate portion of the whole thing. The job owning is to convince people of what it is that the Federal Reserve is going to do. That's it. Right? What are you convinced of? I mean, ask yourself, and at the end of 2023, did you think that there was going to be 7 or 4? Right? Now, how many do you think? Is there going to be 0 or 3? Right? Because before it was 7 or 4. Right? Now, I'm not talking about you personally. I'm just talking about like the mainstream media and the narrative that comes from it. Right? That's the job owning. That's the forward guidance. That's the monetary policy. That's the signaling. That's all the stuff that the Federal Reserve is now using, because that is the way that they are now getting the markets to behave in a particular fashion that now moves them in the direction. I mean, you think about it, why is it like people are like blown away by some of these jobs reports that are coming out? And I'm thinking, why? Why is this so amazing? Like, to me, this is not something that is unusual. In fact, I thought it was something that was going to be taking place. How long ago did I do that video? Probably 7 months ago, I did a video called Getting High and Staying High. And wasn't even that popular. It got like maybe, I mean, it was fairly popular. It got like 8,000 views or something like that. But it was not like, you know, want to be rich, drive a POS. That got 400,000 views, right? So I did a video about getting high and staying high, talking about how the Federal Reserve is going to be conducting themselves, and it's probably one of the most accurate videos that I think I've done in a really long time. But it's totally what's taken place here, right? And if you kind of understand the neutral interest rate, right, where that neutral interest rate moves when the inflation expectation is elevated, right? So as the people are convinced, oh man, we think that, all these statements coming from the Fed, much like the progress is much slower than we have thought. It's still much too soon to cut rates. We're nowhere near where we want to be yet. All this stuff that they talk about, that raises the inflation expectation. When you raise the inflation expectation, you will begin to raise the neutral interest rate. If the Fed remains still and the neutral interest rate begins to rise, it makes the economy less restrictive. All this stuff is happening within the economy, and people are scratching their heads going, well, why is it doing so well? I don't get it, And I'm like, man, I didn't watch that video I did 7 months ago talking about this, And like, to me, it wasn't hard to see, like, because this is what the Federal Reserve said that they wanted to do. Like, they described this. I can't pin and point it out in a single paragraph within a speech. If you combined all their speeches together, you see the message. You can hear it. It's clear. Like, if you sit in the room long enough, you can get an understanding of who they are, right? And you're like, man, I know what they're going to do. I can tell. I can tell by their talk. I can tell by their behaviors. I can tell by the things that they have said, by the things that they're looking at and talking about, right? That neutral interest rate was a major issue for them prior to the pandemic. I mean, think about that. Today we face an altogether different set of problems stemming from a very low neutral interest rate. A very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. Right? Bang. I mean, this is like, when I read that, I didn't understand it at the time. Like, I read this thing, it was one of the, like, probably within the first 6 months of me creating this video, I found this speech and I did a review of, like, breaking this thing down in like 4 or 5 different videos. I go back and I watch those videos and I laugh because I had no clue of what it was that I was reading or what I was talking about, but I don't care. Like, to me, it was very impactful to, the outcome of this channel and what has happened, and some of the understandings that I got from like, not only like, being stuck on this speech and the things that came after that, but it made so much more sense to what's going on in the economy now. I listen to some people out there and they're clueless. Like, anybody who's talking about a 2% target that the Federal Reserve is attempting to achieve doesn't get it. Absolutely has not gotten it. They missed it. They missed it completely. Yeah. I don't know how I did this. I don't know how. Like, I feel like I'm the only one who's talking the way I do. I wish I could find like articles that would describe more of the things that I'm describing or the things that I am saying, but I just can't find them out there. I mean, people just don't seem to either see it or know it. Let me see. Here we go. This downward shift in inflation expectation has a second round effect on real interest rates, the economy, and inflation. When policy is constrained by the effective lower bound, right? So when the Federal Reserve run into zero, that's the effective lower bound, zero. Right? When policy is constrained by the effective lower bound, a downward shift in inflation expectations raises the real interest rates, further diminishing the degree of monetary stimulus, making the downturn worse and reducing inflation even more. Even in times when policy is not constrained, the expectations of below target inflation in the future affects current decisions. See, this is what they are problem with. See, think about that for just a second. This was their problem, right? The expectations of below target inflation in the future affects current decisions. So they want to make sure that you don't have a below target inflation. Right now you have above target inflation. It's 2.8, 2.3? What is that above target inflation expectation that you have? Oh, right in line with what they needed because they had it too low, right? below target inflation futures decision, putting additional downward pressure on inflation. In other words, monetary policy is always swimming upstream, fighting a current of too low of an inflation expectation that interferes with an achieving the target inflation rate. They couldn't do it. They were failing miserably, even after quantitative easing 1, 2, 3, and 4, quadrupling of the money of the balance sheet, taking $850 billion to $4.5 trillion or more. They still couldn't do it. Right? And this is where, like, I mean, it's just like, to me, like, now I look out there and everybody says, like, oh, the Fed screwed up and look at all this inflation and look how painful it is. And it was just like, yeah, it is painful. It's exactly what they wanted you to experience, was a bunch of pain so that they could raise their interest rates, the Fed funds rate up. They got it. It worked. You know, people are mad at them for the wrong reasons. I don't know if they're mad at them for the wrong reasons or not. I guess that's my opinion. Here we go. The second option, average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation rate in good times, when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times, so that the long run average inflation rate and inflation expectations are in line with the target. This is really, like, I don't know. To me, it's like it's so easy to see it now. And I mean, I know, like, people are asking me to build courses and stuff like that to get in. I'm working on these things, but it's like, it's hard for me to understand what it is that people don't know about the economy. When I see it so clearly as I do, it seems like everybody has just gotten delusional about it. And then it makes me wonder, it was just like, damn, am I the delusional one? But I'm getting my information from these guys, not from people who are assuming that these guys don't know what they're doing. They seem to know exactly what they're doing. Yeah. All right. When you know what they are doing is making sure the Federal Reserve note is totally destroyed, then everything suddenly makes perfect sense. No, it doesn't. That doesn't make perfect sense. In fact, if they were wanted to be totally destroyed, then they wouldn't have done anything when they hit the lower bound of zero and they went to zero interest rates and they went into quantitative easing. They would not be in quantitative tightening right now. They would not have attempted to raise their interest rates. They would not be attempting to reel in inflation, which they're not really trying to do. They would not be trying to keep the inflation expectations well elevated so they can maintain these things. They would not be doing any of that stuff. They are literally saving the Federal Reserve note. They are. If all the debt that was due in dollars came due today, the Federal Reserve would not even be able to cover it. Right? Not like, there is not enough printed money in the world to cover all the debts. That puts a demand for dollars unlike anything else out there. If all those debts started to come due, the Federal Reserve could not print at a pace that is fast enough, nor would they have the assets that they could purchase in order to cover all those debts. They would literally have to start buying the debts of other nations out there in order to cover the amount of demand for their liabilities. Right? They're not out there trying to destroy the dollar. They're not. What they're out there is they're trying to maintain this monetary system. And the unfortunate consequence from that is the separation between the rich and the poor, which is incredibly painful. The inequality that you end up experiencing within this monetary system makes it seem like you'll never be able to achieve what's on the other side of the wedge, because you probably won't, because there's not everybody can make it there, you know? And that's what's sad about it, is like, understanding it from that kind of view then gives you at least some sort of idea that the system can't be fixed. You have to deal with it. You have to deal with it in a way that is not like everybody else, because if you're doing what everybody else is doing, they're going to fail too, and you're going to fail right along with them. You got to do something different. You got to behave and act and do things that are far different from everybody else out there, because everybody is hoping and wishing and dreaming for a fix. There is no fix. Right? This is the way it is. You just got to work with it. You know? All right, what time? Okay, 15 minutes, and I'm an hour. Oh gosh, I'm an hour into this. All right. Yes, it does. Okay, I'm moving on here. Let's see. People on YouTube are saying Bitcoin is going to 134,000 because of halving. I mean, well, what if it goes to 1 million? I guess it would be cool for those who have it, right? But it's not going to change the way anything is going to be done. They're like, there's no way that the world is going to a Bitcoin standard or gold standard for that matter, or for any other currency out there anyway, unless, the United States happens to completely crumble and burn. There's nothing else out there that can really replace what the dollar is doing. Like if you take it from Gresham's law, just from that particular thing, right? That one theory out there that was established back in like the 1500s, if I remember right, through coin clipping. So if you can imagine two different currencies out there, a good and bad currency, one of them is going to be good, one of them is going to be bad. Bad currencies chase out good. I got this silver coin. You got a fiat dollar, right? If I hand you this coin and you got a fiat dollar in your hand and I tell you to go spend it, which one of those are you going to spend? I say you can spend either one of those. You only spend one. Which one are you going to spend? You're going to spend that dollar. You're going to keep the silver coin for yourself. Everybody's going to do that. They're going to hoard the silver. They're going to hoard the gold. They're going to hoard the good currency. And they're going to spend the bad currency out there into the economy. And unless that bad currency completely collapses, there's really nothing else that's going to come in, because a good currency won't come in and nobody's going to be introducing a bad currency. That doesn't make any sense, right? So this is where it comes down to. Even you can hope and wish and dream and pray for their things to be different. It doesn't work like that. It's just, it never has and it never will. So it's best to understand that it's going to be the dollar that's going to continue to dominate the world currency. It's going to continue to be the currency that everybody demands in order to pay off their debts. Right? Is it going to continue to lose purchasing power? Probably. Are they going to continue to print at some point in the future? Probably. Are they going to go digital? Probably. Right? Is there going to be ever increasing amounts of separation between the rich and the poor? Guaranteed. Guaranteed. Like, there's almost no doubt about it. And, the only way that ever turns around the other way is if there's completely or utter destruction against everything out there. So have fun with that, They don't want the middle class anymore. It's not that they don't want it. There is no want. There is no want or choosing to or anything else, right? It's either maintain this system and keep it going, which is going to constantly create this situation of inequality growth, right? It's like either you have it or you don't. It's the unfortunate consequences of doing this, right? And I'm not trying to defend it. I don't think it's a good thing. I think it's a bad thing for a lot of people out there. And I'm not trying to defend anybody for their actions as far as being on the right side of the wedge and being able to make a ton of money off of this idea and separate themselves from everybody else. And as greedy as that sounds, hey, that's their fortunate position for being in the right place at the right time with the right ideas. Everybody else is going to have to suffer the consequences, as this is the way it is. Like, you can't fix it. Like, there's no fixing it. It's not a matter of wanting or not wanting a middle class. It's just that it's going to disappear, considering that the way the system operates. If you want to have another industrial revolution, then go someplace that is going to go through one. Right? All right. Pods and mansions, bye pop. Okay. The next generation wants free stuff just as much as their forefathers. Okay. My $50 saw has made me thousands. See, there you go. Some beers versus saws. When you day work with it, what do you mean? Do you keep saving at a bank and invest in something, stock market? Join the channel. Yeah. The membership, I think the membership is probably one of the best educational portions of YouTube that you can ever be on. Like, not only do I cover like very close to date speeches and topics and things that are coming from the Federal Reserve itself. I break them all down, but then the discussion that comes from the comment section is so good. It's like, it's pure gold. Like, I think I have one of the best comment sections on YouTube when it comes to the economy, just simply because the people here are so serious about it. When you get down to the membership level of things, it gets very serious. Like, there's no, I mean, it's all about trying to figure it out, trying to understand, you know, the questions that are asked or answered by people who are very intelligent. It's just like, you know, I'm almost like the background of what's going on within the comment section, you know. Why wouldn't the Fed try to curb inflation? Expectations are still well above current inflation, so I understand that part of your argument, but still seems like the Fed is targeting their 2% inflation ideal. All right, the 2% inflation is not a real target because they have never been able to achieve it, right? And if you're never able to achieve a 2% target, then you can't possibly say that that's what you're going for, because you can't go there, right? What happens if you have never achieved the 2%? What if you ran under 2% for 5 years and then one day you hit 2%? Hey, we finally did it. Well, for 5 years, you failed to achieve a 2%. So now you have an economy that has an expectation that is really low, which is going to be difficult to operate in, especially if you can't maintain that 2%, which they never have. So even though after quantitative easing 1, 2, 3, and 4, they had an elevated inflation expectation that really ramped up, that had everybody, including myself, convinced that there was going to be a hyperinflation scenario, that whole idea and expectation petered out, and it ended up going below the 2% in target. So now they have no way of having a 2% target if they've never been able to achieve it. You see where I'm kind of getting at? Now, before, the Federal Reserve would let bygones be bygones. Like, whatever, you know, I mean, if we fail to achieve it, so what? Just try and hit the 2% target. Well, if you never achieve that, and you never land at the 2% target, the economy begins to believe that you can't do it either. And that was the major problem, is that they were suffering from an inflation expectation that was persistently too low rather than too high. So they can't go for this 2% target. It doesn't work. Like, the idea does. The reality doesn't. Like, they can't do it. They've tried. They tried several times. They tried it for 10 years straight of having an inflation expectation of 2, or an inflation target of 2%. They couldn't do it, right? So now they changed it. They don't go for this any longer. And let me see if I can find it here. Hold on, just bear with me, guys. I'm trying to find this speech so I can say it right. Here we go. Powell, August 27th of 2020. And now, we reiterated this the other day when the congressman was questioning Jerome Powell. This was probably 2 or 3 weeks ago, 3 weeks ago now, about this exact thing. Like, the congressman said, you guys kept interest rates low for a significant amount of time, creating the inflation scenario that many of us, this is the congressman saying that many of us didn't quite understand why, right? And now we know that you're keeping an inflation that is above target to make up for those past deviations. This is what the congressman said. And he goes, do you plan on adjusting interest rates at some point in this future to the 2% target? And Jerome Powell answered, that is something we are going to review at the end of this year. That is still the monetary policy, and we are going to review that at the end of this year. He did not answer the question clearly. This is the monetary policy. Okay. Now, I'm going to go back and I'm going to read this. Many of you have heard this before, but I'm just going to go read it again. All right. It says here, we have also made important changes with regard to our price stability side of our mandate. Right? This is their mandate of price stability and then full employment. Our long-run goal continues to be an inflation rate of 2%. Right? So 2% is the objective, right? Our statement emphasizes that our actions to achieve both sides of our dual mandate will be most effective if long-term inflation expectations remain well anchored at 2%, to make sure that expectations remain well anchored at 2%. However, if inflation runs below 2% following economic downturns, but never above 2% even when the economy is strong, then over time, inflation will average less than 2%. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pulls realized inflation down. To prevent this outcome and adverse dynamics that could ensue, our new statement, this is the one that the congressman was questioning about. They said the one that they were going to be reviewing here at the end of the year. These are usually 5-run long policies, right? Our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods of inflation, when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Now, think about it. When the congressman questioned him, you had interest rates low for a significant amount of time, creating the inflation scenario to make up for the past deviations. That's what he's talking about right there. Following periods when inflation has been running below 2%. Now, after quantitative easing 1, 2, 3, and 4, the Fed failed to achieve the 2% target. They ran below it. That's what he's talking about. The congressman was talking about it. This is the situation that they were talking about. This is what they were talking about right here in this speech, right? Following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2%. That's exactly what they did. So inflation started running rampant, and they had interest rates running low. I don't know how many times I said it. They were keeping interest rates low for a significant amount of time to let inflation run extra hot for an extra long, for an extended period of time to make up for the 2% failure that they didn't achieve. Right? In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula. Right? No particular mathematical formula that defines the average. Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decision about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. Of course, if excessive inflation pressures were to build and inflation expectations were to ratchet above levels consistent with our goal, we would not hesitate to act. Now think about that. If inflation expectations were to ratchet above levels consistent with their goals, how many times have you heard it? Inflation expectation remains well anchored. They're cool with it. It's not above their goal. It's right in line with their goal. They like this. They like the position that it is in. They did great, right? In their minds. They totally succeeded. All right. Guys, I'm going to give it like 2 more minutes and then I'm going to go. My phone's about ready to die anyway, and I was only planning on being out here for less than an hour, so. All right. Hello, friends. Hello, Midwest Cannabis. Great to see you here. The price will be basic freedoms. All right. I'm out. Good chat. See you later, TM. Enjoy your weekend, all. You too. You too as well. All right. It gets me when people say, no, the Federal Reserve note is not, or is it in that, what is this? No, the Federal Reserve note is it, and that's just the way it will be. All fiat currencies fail. All right, David. Yeah, I totally agree that all fiat currencies fail. Right. What I'm trying to say is that it's not failing yet. Right. And it's not failing tomorrow. And when people were asking me in 2020, when the dollar fails next year or the year after that, and I laughed and I said, it's not going anywhere. It's not going anywhere next year. It's not going anywhere the year after that. And I still believe that today. And in fact, if you go and you look at the BRICS nations, Brazil issued out a lot, I don't even know how much it was, a lot of dollar-denominated debts that are due in dollars. They borrowed in dollars, they're due in dollars. This is one of the BRICS nations, Brazil. Right? So for the next 10 years, there is going to be a demand for dollars coming from Brazil looking to pay off their debts. Like, I don't know how many people talk about this stuff. Like, but this is in existence. Go Google it yourself, right? Simon, I'm curious, what you think of this? Coming off the gold standard gave the U.S. the ability to weaponize the dollar, which gave it an answer to nuclear weapons, which no one can use to fight. Well, I think that was part of it. However, it wasn't like the dollar was created to weaponize. Like, I think that's where a lot of people have a feeling towards. I don't think that's what it is. I think that men saw that it could be weaponized, right? I think there was people out there who were aware that it could be weaponized and cautioned against it. I think there was, probably even some inevitability that it was going to take place, but I don't think that was the cause. Like, I don't think that was the reasonings for it. If that was the reasonings for it, then it wouldn't have happened. The reason why it happened is because literally gold was not plentiful enough to cover the amount of demand for transactions that people wanted to do. Guys, I'm sorry. I would love to sit here and keep talking, but my phone's about ready to die. My screen just went black. So thank you very much for hanging out. I hope you all had a great time. Thank you very much for the super chats. We had 220 something people, 230 something people watching. I really appreciate all the thumbs up. Uneducated Economist, you guys let me know. Oops.